By the Q&A. I'll now hand over the call to Mr. Zaki. Over to you, Zaki.
Thank you, Ankur. Assalamu alaikum. Welcome, everyone, to Rasan's earning call for the result of the first half of 2024-2025. Before we start, I will go over the disclaimer of the earning call. This presentation contains certain statements that are forward-looking statements. They appear in a number of places throughout this presentation and include statements regarding the intention, beliefs, and/or current expectations of Rasan Information Technology Company and its subsidiaries, together the group, and those of their respective officers, directors, and employees concerning, amongst other things, the result of operations, financials, conditions, liquidity, prospects, growth, strategies, and businesses operated by the group. By their nature, these statements involve uncertainty, since future events and circumstances can cause results and developments to differ materially from those anticipated. The forward-looking statement reflects knowledge and information available at the date of the preparation of this presentation, and unless otherwise required by applicable law, the company undertakes no obligations to update or revise these forward-looking statements. Nothing in this presentation should be considered as a profit forecast. The company and its directors accept no liability to third parties. This presentation contains brands that are trademarks and are registered and/or otherwise protected in accordance with the applicable law. Now, I will hand over to our CEO, Muayyad Al-Thallaj.
Assalamu alaikum. Thank you very much, Zaki. Good afternoon, everyone, and welcome to Rasan H1 2025 earning calls. And my name is Muayyad Al-Thallaj, co-founder, Chief Executive Officer of Rasan. Since the very beginning, our mission has been clear to simplify the customer's access to the financial services by offering the competitive and pioneering digital solution, as we mentioned many times in our roadmap last year. The mission has guided us as well and guide the journey from a bold startup idea to becoming one of the region-leading publicly listed fintech and insurtech company. Join me today, as we mentioned early, our Chief Strategy Officer, Nicola Garelli, our Chief Compliance Officer, Zaki Al-Ismail, our Chief Financial Officer, Yazid Al-Hayaf, and our Chief Investment Officer, Zahir Hussein. Together today, we will look forward to sharing how this mission has translated into exceptional performance, alhamdulillah, in the first half of 2025. And we start from, if you go to the next slide, Zaki, thank you. As we promised, alhamdulillah, strong growth, and we delivered even more despite the intense focus last year in the IPO preparation and the market-wide decrease in the premium prices. We was, alhamdulillah, the revenue has nearly doubled, far above in the IPO guidance last year. Adjusted EBITDA has tripled, with the margin expanding by over 150 pips. We launch as well, we focus in the same line that launching, developing new several products, is around 7 products, expanding our reach and reinforcing our position in the leading, in the innovating in this market, insurtech and the fintech as well. As well, our market capitalization has growth around 2.5x since the listing. Next slide, Bujori. We usually advance this one by our strategic roadmap by main items. The product innovation with the new offering, as I mentioned, and the enhancing in the customer experience. As we see today in our new Tamini app that has been launched last few months ago, this is an example of the great user experience that we are continuing developing, as well in the strong technology with the reliable platforms and AI built in-house in all our subsidiaries, as well the industry evolution of supporting by over around 50 new commercials strategic partnership. And I think last week and the early of this week, we announced two material partnerships with Musanid and SMB. Regulatory as well alignment with the regulator first approach that support the sector and the development objective of the whole market. Every business lines, as you see, has actually contributed in our momentum. Motor retail up to 61%, motor lease up to 157%, health up to 62%, other product around 81%. This all contribute together is around the growth with 88%. We see as well, as you see here, what we promised so far last year in the IPO and what we perform actually after around a year of our listing. In 2024, the revenue is 40%. We deliver 40%. The first half of 25, it was 30%, and we reached 88%. We hit 88%, and the gross margin from 24 to 67, and the H1 25 to 72. As well, if you see in the EBITDA, that was the margin between 25 to 30, and we hit 32 in 2024. As well, we hit 38 in the first half of 25, and it was in the margin between 26 and 31. We see, and the next slide, Abu Juri, we see, as you see, we see several paths that helping us to further growth, innovating and upgrading our products, benefiting from the market could grow threefold with the government and regulatory backing, shifting toward the higher production products, expanding into related areas, and leveraging definitely from the greater awareness and informants in some of the products. Ladies and gentlemen, we achieve, alhamdulillah, this by staying focused on what we do and what we promised. And we do the best innovating, and we execute with a discipline and building a deep strategic partnerships, as we mentioned early, all while riding the great wave of growing and involving the insurance market in the Saudi, in the Kingdom of Saudi. Our performance in H1 not only demonstrating our ability to deliver, it prove we can outperform expectation. As you see, with all the expectation, the whole market, we was above this expectation, and accelerating as well our strategic roadmap. The second half as well this year offer even greater opportunity, inshallah, that what we believe, and we are entering it from a position of strength. Let's now just take a closer look into our business update with my team, the financial performance, and the outlook of the rest of 2025 with my colleague, Nicola.
Thanks, Mayad. So as Moyad was mentioning, we come from a strong and very consistent first half of 2025, where we did deliver I would say outstanding performance, supported by few of the theses and the strategy that we expressed at the IPO time. So I will just bring us through the few elements around the market to reconfirm the strength on the landscape in which we are operating, and then mention the main achievements in the first half, and particularly in Q2, that are really standing out for what they will be able to prepare going forward for the remainder of the year and for the midterm. So at first, let me focus on the market. If you remember, part of our equity story is the ability and the willingness to support the innovation and the transformation of the Saudi insurance market. And the Saudi insurance market is performing remarkably well. Now, if you look at the numbers, we saw an overall a CAGR of around 16% from 2023 to the expectation that we have in 25. But even the more important element here is that there are segments that are being created from scratch. There is life that was very minimal 3 years ago, and now it is building. It is getting. It is creating a space within the sector. We have motor where we are assisting to an important transformation that we will be touching in a while, particularly around comprehensive and across the segments. We have health where the demand is changing and is preparing for a more sophisticated and also more demanding set of requirements from employers and from employees and dependents. So overall, we are sitting on a market, we are operating on a market that is growing and is expected to continue a healthy growth in line with our expectation at the IPO time. And that is facilitated by structural tailwinds enabled by the government and by the regulatory objectives of improving the protection of citizens and companies in the kingdom. So if we just touch among the four main lines that we're seeing in the insurance market, I will start with health. In health, that is growing and it is growing in a healthy manner. We are also seeing a demand for better protection. So it is driven by the increase of the market is driven by enforcement, reduction of the underinsurance gap, but also a structural requirement from employers to serve better their employees and their dependents. And also there is a transformation of the industry that will continue delivering and pushing for the segment to grow radically in the next 5-6 years. In motor, we are seeing a growth that is driven by volumes. The enforcement is still there. We shall remember that around 25 to 30% of the vehicles in Saudi is still uninsured, but the gap is closing thanks to the enforcement actions that have been taken by the regulator in the last 2 years. But there is also an important organic growth of the car park. Motor insurance is also getting more comprehensive. We started from a few years ago from a market that was almost exclusively third-party liability, but particularly in the last 2 years, and it is happening also in 2025, the drive towards comprehensive is becoming a real factor. So a lot of opportunities in motor, also linked with the pricing, with the structural price increase that we started seeing in November, December 2024, and that has been continuing during the first half of this year, still not reaching the level where we believe that the portfolios will be fully rebalanced and able to deliver the profitability for the entire sector. There are also a set of new general insurance lines that are growing in a radical manner, and they respond to the changing requirements that come from small and medium enterprises, and from corporates, but also from new requirements from the government aimed at making sure, as I was saying before, companies are better protected, employees are better protected, domestic helpers, domestic workers are better protected. When you build a house, you have an extended insurance and so on. So general insurance is also a space that we see growing in an important manner. And overall, the underlying market environment has been very conducive in the first half, and we expect to continue as such in the second part of the year. So if we go to the next slide, within this market, conducive and supported by structural tailwinds, we delivered across all the business lines. We delivered in motor, we delivered in health, we delivered with the new products, and we did so with important revenue growth, but with profitable growth, in line with the promise that we of value creation that we had at the IPO time, and that is guiding us during our execution. So let me first touch motor. In motor, we are continuing to strengthen the portfolio, and we're continuing to strengthen the portfolio both in retail and in leasing. Of course, leasing got quite a bit of attention over the last year since we started changing the engagement model with majority of the banks and non-banking financial institutions, our fundamental partners. But that is only a portion of that. Even retail, motor retail grew 61% year over year. So even the opportunity that we're seeing in our core retail business is continuing. And during the first half, we did observe an improvement across all the key indicators that are behind the retail motor business. The renewal rate increased, and it decreased by 4 percentage points year over year. You remember that we had a major increase towards the end of 2024, year over year, but that increase is continuing. So we are delivering, we are renewing better, we are retaining customers better within our portfolio. And that has been enabled by an increased cooperation with the insurance partners to enable a healthy evolution of the portfolios by improving loyalty and post-sale services. Just to remind us, we launched a few months ago Tamini Hero, that is the first entry, early entry in the first notification of loss and in serving the customers at the moment of need with a light support, but it is fundamental to keep the user within the ecosystem. And also with a radical improvement of the customer experience that, as Mohamed was saying, came from the applications, from the various upgrades of the properties, but also with a radical simplification of the funnels and of the convenience through which, for example, you can renew a policy year over year. At the same time, our strategy of converting and upselling to comprehensive is also delivering. I would say that we are probably the main driver of this transformation in the market. We believe that there is space for consumers to get protected better with comprehensive insurance. So if you remember, over the past couple of years, we introduced a set of products that are necessary to cover the price ladder. And that is delivering. And in the first half, we reached 90% growth in comprehensive year over year. But at the same time, also third-party liability is not forgotten. Third-party liability is also something that has been growing, and where we have been observing a 30% growth year over year, mostly thanks to the regulatory enforcement, but also thanks to selected strategic actions that we implemented in our product portfolio. So overall, retail is growing, and it is growing in a very healthy manner. At the same time, leasing is also has been delivering exceptionally well. We observe a 157% growth year over year, That came with reaffirming the long-term partnership with all the banks and non-banking financial institutions in the kingdom, and by the completion of a new wave of innovation in the software, but particularly in the operational components of the product that we did apply with 21 leasing players in the market. So overall, leasing is evolving in a healthy manner. As Moyad was saying, we completed the transition of Saudi National Bank to the new leasing model in line with expectations. So our motor portfolio has been delivering well over the first half and is expected to continue being a growth generator in the remainder of the year. So I will go to the next slide and briefly touch the health. That is a second important area of development, both in the small and medium enterprises and in the corporate segment. So in health, we are equally delivering very positive growth and revenue performance, 62% growth in revenues year over year. And that came with a strong increase of renewals, 11 percentage points of increase year over year, by an increase of the total GWP, and most importantly, by an 18x increase of the GWP that we generate in higher classes. The shift towards higher classes is one of the actions that we have been building over the past few years, and it comes with an increase of convenience, with enabling new avenues of customization and the selection of benefits for customers, also in partnership with our insurance partners. It comes with multiple avenues to innovate, to protect the buyer, the employees, and the dependent in a better manner, but also by enabling the other players in the market to accelerate the digital transformation and the behavioral evolution that we are observing early on in the journey, and that we expect will impact the market in a positive manner over the coming quarters. So health also did deliver a very positive growth over H1. I would also mention, if you go to the next slide, the growth in the portfolio, because for us, building a one-stop shop for insurance products is one of the elements that drove our agenda, particularly our insurance innovation and distribution agenda, because that comes with our ability to continue maintaining scale, continuing to innovate and accelerate the innovation for better protection of citizens and companies in the kingdom. So Q2 was outstanding, I would say, from a product delivery point of view. We introduced in the market 4 new verticals: motor fleets, health individual, home, and protection and savings. Behind each of them, there is an important potential of markets that are building and that might be enabled by further regulatory drive and enforcement in the years to come. So we successfully started positioning ourselves in those markets, and few of the lines are already starting to deliver results. It is also important to mention the strategy around the domestic helpers. As Moyad was saying, we completed a selection and the partnership with Musaned, with the Ministry of Labor, to boost the development and the sale of our domestic helpers product. Domestic helpers will be one of the pillars of the portfolio growth in this multifaceted product composition over the next quarters. At the same time, in this construction of a one-stop shop for insurance, we are also continuing to build our financial services proposition. We confirm that the regulatory process that we have ongoing, it is progressing, and we expect that we will be able to see the first products in the market towards the end of this year, beginning of next one. So overall, we come from a healthy, strong first half of 2025 that also delivered growth, profitable growth, but even more importantly is continuing to put the basis for the future growth that we will expect to experience in the coming years. So I will pass to our CFO, Yazid, to drive us through the financial results of the first half.
Thank you, Nicola.
Thank you, Nicola, for the brief of our business updates. And we take you, gentlemen and ladies, to the financial performance for the first half of 2025. As you have seen that our revenue reaching 245 million with 88% growth year over year. Our volumes, if you're talking about policies, we are 23% higher, in terms of the leasing 33%, and in terms of the health 71%, leading to a great GWP around 3.5 billion Riyal Saudi with the 28% year over year growth. By increasing our revenue, we are maintaining our gross profit with the much healthier percentage and reaching 176 million during the half year with the 127% year over year growth. Our adjusted net profit is showing 84 million with 4 times or 357% year over year. Our operating cash flow shows our liquidity, show how we are managing the cash, and there we reaching 102 million Saudi Riyal. If you go to the next, please. Now, if we take first half to the first half of 24 and 25, and we break it into multiple lines of our P&L, you will see our gross margin were around 60% in the first half of 2024. We enhance it with multiple initiatives that has been done through partnership, through multiple process that has been enhanced in the business, reaching first half of 2025 into 72%. Our OPEX absolutely will increase by 81%, since we have multiple initiative in the business that will be able as well the business to grow and to accomplish these goals. So we reach 101 million Saudi Riyal during the first half of 2025. If we talk our adjusted EBITDA and net profit, I want to just elaborate what do we mean here. And adjusted we mean here is non-cash related to ESOP impact during the period. So if you see it, you will see the impact of adjusted EBITDA increased and improved from 22.2% into 37% or 37.6% with 15% enhancement during this period of time, comparing to the last half year of 2024, as well as net profit, adjusted net profit has been tremendously increased with the strong record of 84 million Saudi Riyal. We'll take you to the next slide in much more details and with the bridge and the comparison as well and the quarters. If we take a quarter 1 to quarter 2, which is one of the major milestone that the business has accomplished, that our second quarter is higher than first quarter. Last year, for example, we were negative 5%. We are lower than our first quarter. You see this year is an outstanding performance. Quarter 2 is higher than quarter 1. Also, we need to mention as well the seasonality and the Eid and holidays included, which were when the business shows how focused we are, how the management as well be able to maintain the momentum of revenue during the second quarter. H1 and H2 as well. So you see it as well continuous the growth and the story of 88% revenue. This has not happened by coincidence or by chance. There is a lot of strategy done during the business. There is a lot of enhancement done in the business and diversification of our revenue. If you see it in 2022, our focus was only in motor and retail and around 95%. And with the time, we took it gradually. We diversify our revenue more into 49%. Now we are reaching as a first half into the motor retail, with another diversification to leasing and other products and health, to make it more sustainable and more profitable to everyone engaged and interested in Rasan as well. Next, please. And now for gross profit and gross margin, if you see it, so our gross margin, gross profit were in quarter one 86 million. As you see, the enhancement is 90 million in quarter two. If you take it as a percentage wise as well, there is a 2% enhancement for multiple process and multiple increments is related to the product mix. There is a discussion as well in terms of the partnership and to the cost rate as well. So all of them been maintained to make the gross profit and margin percentage as maintained during the period as well. So if you take the bridge as well, if you want to try analyze from quarter first half of 2024 reaching to first half of 2025, you will see there were around 115 million or 105 million coming from the diversification of the revenue of motor retail and leasing and health, as well as other products, as well some increase as well in terms of other direct costs, which it has to be done, because since our revenue increased, so our direct cost as well increased, but we maintain percentage a much healthier way comparing to the last year. For adjusted EBITDA and as well the bridge of it for if we take it as a quarterly basis, so our quarter increased by 56%, do around 20 million enhancement for the quarter happened for multiple aspects. As we have mentioned, there is a revenue impact. If you see the bridge, we have a revenue effect is around 68 million. The gross margin impact is around 30 million, and there is as well a negative impact on our side. We spend more on marketing. We spend as well higher comparing to the last year in terms of G&A, and then some administrative cost or some other fees. All of this is to abilize the business to capture the revenue and to make a proper penetration into new segments that we are targeting, and to maintain and retain our customer and make them satisfy as well for our revenue. So if you take the as well the first half of 2024 comparing to the 2025, we have improved from 29 million to 92 million, 22% to 38%. As we have mentioned, the product mix has changed. We have a different methodology that we are using in terms of partnership and in terms of utilization and optimization our spending within the business. So for adjusted net profit, we have been utilizing in multiple items. If you compare our adjusted EBITDA to adjusted net profit, there is multiple items that has been considered, like we have utilizing our cash, and we gaining more from Murabaha as well. But there is some challenges as well, and which is as normal of the business. If the growth, the taxation and zakat will increase as well, and some depreciation and amortization as well will be impacted due some heavy investment inside the business for some intangible asset that we are building. However, by saying this, we see the growth, and you see as well the adjusted net profit, we're reaching 34% comparing to the 14% from last year of 2024. If you go, yeah, for after during this half year of 2025, we have seen and we have seen that our promises numbers has been accomplished and exceeded. So the management had decided to revisit our guidance, and I will leave it now for Muayyad and Zahir for more elaboration. Thank you.
Thank you very much. Zahir?
Thank you very much, Moya. Thank you very much, Yazid. So let me now take you through the guidance we are providing to the market for full year 2025. As you will appreciate, the recently announced SNB and the Masanid contracts are material contracts that will continue to have a big impact on the business. Given these are now signed, we are now in a position to provide you guidance for full year 2025. Let me start off with the revenue. As you have heard from the team, the business is continuing to perform phenomenally well, and we have transformed the business from what it looked like a year ago to what it is today. Whilst at the time of the IPO, we guided to revenue growth of about 30% for 2025, our performance has exceeded that significantly, and in light of the performance to date and the recently announced contracts, we expect to close the year with total revenue of about 590 to 625 million SAR. This represents year-on-year growth of 65% at the bottom end to 75% at the top end. Moving to gross margin, here we expect to close the year at gross profit margin of 68 to 70%. This represents a 1.5 to 3.5 percentage points higher versus full year 2024. This is slightly lower than the gross profit margin at the half-year point, but that's primarily due to our intention to continue to launch new products and bring online some of the new businesses that we have just won, and these will come online in the second half of the year. If we then move over to adjusted EBITDA margin, we expect to deliver adjusted EBITDA margin of 32 to 35%. At this level, this represents an increase of about 0.3 to 3.3 percentage points versus the full year 2024 number. And again, this is slightly lower than the EBITDA margin that we have in the half-year point for the same reasons that I've outlined before. With this, I want to thank you for dialing into the investor call today, and we'll pass back over to the HSBC team so that we can open up for questions.
Thank you, Zahir. So I think we already have our first question from the line of Luke Holbrook. Luke, please go ahead.
Good afternoon, everyone. Thank you for taking my question. It's just then on the guidance side, I just wanted to understand how much industry pricing tailwind you have included within the revenue guidance. And can you just unpack that for us, assuming it's around 20% year on year, how we should think about that drop through to adjusted EBITDA? In other words, how much of your guidance uplift is attributable to extra pricing insurance premium tailwind in the industry? And then secondly, do you mind just touching a little bit more on the competition side and just giving us an update on how BCare is faring in the industry, particularly on the motor side and healthcare? That would be very much appreciated. Thank you.
Thank you very much, Luke, and we'll come back. It's divided between two. I will, if you can take Zahir the first one, Nicola, take the second one. Thank you very much.
Great. I think Nicola might add to the first one first, and then I'll add on top of that.
Yeah, absolutely. So in terms of pricing, as we were saying at the end of last year, we are expecting that the prices will go up 15 to 20% compared to the average of 2024. In the guidance, we embedded the current price level that is not the 15-20% more compared to the average of 2024, but it's probably around half of that. So there is still an upside that might come, but given the uncertainty on whether that will come or not, we decided to keep a more stable price evolution towards the rest of the year.
Thank you, Nicola. Zahir, would you like to add this?
No, I think that's addressed. Again, Luke, happy to answer any follow-ups as well. I don't know, Nicola, if you want to touch upon the competition point.
Yes. So from a competitive point of view, of course, we are always concerned about competition. We are very aware and very alive to detect what is happening in the market. We believe that on one side, the competitive drive, particularly the digital innovation, does also have positive spins because it pushes the market towards innovation, towards development, and towards a business model where we are winning, now where we did demonstrate that we are winning. So we do believe that as the market will move more towards digital aggregation, as it is happening, we are going to be able to benefit more proportionally than other players from this shift. When it comes to the details, we have different competitive landscape across the various products. I would say that we didn't see any disruptive or potentially short-term disruptive move over the last half. So the same considerations that we were making at the end of the year with a competitive environment that is evolving, where a few components like the new licenses that have been there and that are driving a part of the market share adoption will continue, while bancassurance is going to continue strengthening slightly a role. But we do see a fair competitive environment, I would say, without short-term disruptions.
Okay, understood. Thank you.
Thank you very much, Nicola. I just add the flavor here in the last second question. As Nicola mentioned, definitely competition that it will enhance the whole market. There is a huge room there, and it will give us absolutely always keeping us on the edge of the innovation and development. So far, if we look, numbers is talking. The main competitor, he still remain for a few years, like 3-4 years in the market, and we're still having growth in the most competitive product like the motor, but with still that we have a growth in this product that mean our competitive landscape and the value proposition we're adding completely different than the market. And the second part, what's the important part, we still keeping ourselves on the edge of the competitive. That means development, innovation, and so on. And this one we will not let it for any other player, and we will keep doing this one with respecting with the coming competitors to the market. To the next question. Thank you, Luke, for your question.
So our next question is from the line of Sid. Sid, please go ahead. Sid, you are unmute. Madavi, please unmute Sid.
I think if it's written,
so we'll take the next question from the line of Michelle Said. Michelle, please go ahead.
Thanks, Anchor. Thank you, everyone in management, for the presentation. Just a question regarding the economics of SMB's recently awarded contracts. How does it work? And if there is any potential other contracts from other banks that we should also expect? And lastly, why is it under Ta'amini, not under Treza? Thank you.
Thank you very much. It's completely different two model. Under Ta'amini as an aggregator and Treza as a service provider for this one. Shifting this product is benefiting for definitely for enhancing the services and align with all main stakeholders. In terms of if there is others coming in the way, we are absolutely reaching anyone that would love to move and to shift to the other model of our business. As you know, Ta'amini is under the umbrella of regulator. The others part is under a different umbrella. We have more room when we are in the InsurTech part with all the product related. And definitely it's giving more room for revenue and more room for development. If someone from my team would you love to add something here?
Just one brief point. So, Michelle, you can imagine that there are 22 banks and leasing partners that we have in In Saudi, 21 are fundamentally all with the same model, including SNB now. So SNB basically joined the other 20 players that were already with the new engagement model with the same structure. There is only one player that is currently with the software as a service model, and there we cannot guide because there are a few other components in the product that might make the shift more complex, but it is not to exclude. So it might be a potential upside, but it shall be treated as such.
Sure. And what about economics and the commission? How should we think of this in terms of commissions and impact on the P&L?
So the commission is a 15% on the GWP for all the contracts, and there are operational costs that we disclosed also in the previous sessions that are uniform across the market, where we provide a set of claim management activities, product portfolio monitoring, product promotion, and so on. So they do bring a series of additional costs compared to the software as a service model, but the commission level is uniform at 15%.
Thank you. If I may ask,
Thank you very much,
how
Nicola.
big is the SMB actually in the market?
It changes from year to year. What we disclose to the market is around 35% of the market.
Thank you so much.
Thank you, Michelle.
So our next question is from the line of Prateek Khandelwal. Prateek, please go ahead.
I do recommend if we make it written faster, and it will be better. Yeah.
So I think we'll
Okay,
take
please.
some of the
Thank you.
written questions. So I think the first question is, can the management guide us on how the changing regulatory environment around insurance broking is helping the company? That's the first question.
Definitely. Very quick and simple. We go back to the couple of years ago in October when it has enforcement in the motor. We have a very good post for the business, and we keep maintaining this by renewing this business. This is an example of motor, only in the motor. Other example in the domestic helper contract, it has been mandated. That means every single contract issued in Saudi Arabia must to link and has a coverage, insurance coverage, and this absolutely it's giving a great room for distribution and for insurance in general. This is very quick answer for this question. Next one.
Next question is, what is Tamimi Motors' current market share in the retail segment?
Thank you very much, Nicola.
Sorry,
The market share of the retail, Tamimi retail.
Okay. So we do not provide information on the specific sub-segments, and I saw that there are several questions that are relative to the individual shares. The element just directionally, at the end of 2024, we did reach an overall market share in motor of around 43%. That's the most granular data that we are releasing.
Thank you very much.
Okay, so we'll not take the market share questions, but which product category currently delivers the highest gross margin across your platforms?
We usually don't share the details of the product. Thank you very much.
So when should we expect the financial impact of the Musanid contract to materialize?
This one, it will be once it has been the contract signed, definitely it will go for a process. However, just to clarify here a couple of things, Musanid, it has been launched last year, and when we sold policies for a month, and we has been postponed by the regulator to change the model of Musanid, and then we come back again and we get the business. So the business for us, it's not something new that we don't know it. It's already we have been active last year, and now we just reactivate it again once it will be most of the rest requirement has been completed, papers and etc. Thank you very much.
Okay, so I think multiple questions from Ali Al Nasser. What are the factors that will swing revenue growth and margins to the higher end of the guidance, right? You've given a range. So what would help the growth and margins to be at the higher end? And second question is, what is the full year impact of SNB if you look out to 2026, right? Because this year it would be a partial impact. And I think just the definition of adjusted EBITDA margin and any ESOP expenses this year and next.
MashaAllah, this is all the question of today. Nicola.
Yeah. So maybe let's start from the last one. The adjustment is related to the ESOP non-cash ESOP expenses. As you remember, we realized the capital increase a few months ago that was of 1.7 million shares that was designed to as a long-term incentive structure for the management that is being released. So everything that we are seeing as an adjustment is this non-cash ESOP component. When it comes to the guidance, we operate with a portfolio of products. Now, as we're saying, there are a few main lines. There is motor retail, motor leasing, health, small and medium enterprises. But there are multiple lines, more than 15 lines that are at different stages of development. There is something, as Moyad was saying, domestic helpers contract. We launched it in August last year, no? But we launched it and it took a year to start getting maturity. Now that is going to, it will continue the development and maybe it will reach maturity, as Moyad was saying, probably towards maybe end of Q3, Q4, something in that range. Each of those around 15 products that we have in the portfolio has the potential of generating upside and generating a slightly different mix in terms of growth and profitability. Typically, the products that are newer, they go to a journey where they start with lower profitability and then they scale. When they scale, they reach the target profitability. So mostly I would say that the assumptions are on the timing of development of those products, on the timing of potential enforcements, on the timing of adoption, because you need to remember that we are operating in a market that is building. It's not a market that is stable, no? Where you say, okay, I have general insurance is worth 10 billion and that will remain 10 billion. No? Today is worth 10 billion, maybe in 3 years it will be worth 30 billion. Also, and that will be made of many of those new components that will continue building up, driven by the economic and societal change, driven by the government objectives that we are observing in the kingdom. So mostly timing assumptions might change and might make the play more on one of the two edges of on boundaries of the guidance that we provided.
All right, thanks, Nicola.
Thank you
We'll
very
take one question from Sarah Al-Shamasi. Sarah, please go ahead.
Thank you, management, for the call and congratulations on the results. I have a couple of questions from my end. My first question is on your guidance. So I noticed that you are guiding for softer growth in the second half and lower margins, despite the better seasonality associated with second half versus first half. So can you just highlight why do you expect such shift in seasonality? My second question is on Musanid, and if you can give more details on the agreement. Is this a similar aggregation service or is there a unique service to it? And how much of commission rate would you be able to pass? And if there is some sort of sharing agreement with Musanid, given such exclusivity that they've offered through their platform, or would you get to keep all the commission rate?
Thank you, Sarah. Just very quick, I start with the second one, then I will move to Nicola and the first one. We don't comment on the specific contract with Musanid. If you go, we mentioned it that it's we are working like any other aggregator with a commission based by the regulator. Nicola, for the first question related to the guidance.
Yeah.
I can start and then Nicola
Go ahead,
can
Zahir.
add.
Go ahead,
Yeah.
Zahir. Yes. Go ahead.
So on that, I think the way you should see it is not just in terms of the percentages. You should look at it in absolute values as well that we're guiding to. There's obviously a base effect in the half year 2024 that has the 88% growth coming through in the first half. But on a half year to half year growth, as you compare that, you will see the increase in the revenue growth continuing to come through. So I think you have to factor in the base effect, and that's driven by the motor leasing business that came online in the second half of last year.
Maybe if I can just a couple more elements. Overall, the growth that we're experiencing and the change in product mix is also stabilizing slightly the seasonality. It is something that we are not going to fully see this year, but probably next year. So it will be a bit more stabilized seasonality. Still, this year, second half is we expect that to be strong. I mean, as Zair was saying, if you look at the absolute numbers, you will see that we do expect an important growth. In terms of unit margins, I was mentioning the portfolio of new products because, of course, here we have a trade-off between milking the existing and making sure that we prepare ourselves and that we prepare to deliver outstanding growth, outstanding profitable growth for the next few years, for this year, next, 27, and so on. So to be able to do so, we are effectively balancing the new product launches and the way we push on the new products to be able to achieve this sustainability, better scale, and better positioning in the market as we contribute to building the market. And the new products at the beginning, as I was mentioning, have a lower profitability. Okay, so we're going to balance those levers to make sure that we continue growing, but not only this year, but also in the near future.
Thank you, Nicola. So the next question.
So next question is from the line of Hussein Wahbi. Hussein, please go ahead.
Yes, hi. Thank you for the call. Actually, I have just a question on the domestic helper again. Just what is the size of this business line actually, or the sector as a whole actually, and what is the market share of the aggregators in this sector? And what would be, if you may, be your market share within the aggregators, and how much commission do you take from every contract here? Thank you.
Thank you very much, Hussein. Nicola?
Yes, so this is a quite peculiar market. At first, we need to say that it's divided in two parts. There are two different contract types. You have contract insurance and health insurance. Contract insurance applies today in a mandatory manner to all the workers that are coming to Saudi. That means that every worker that comes to Saudi needs to have a contract insurance. That number of beneficiaries is around 800,000, a bit above 800,000 based on the current run rate, and it has been increasing quite substantially year to year in the last 3 years. So that type of insurance is mandatory, and it is designed to protect the employer in case of damages done within the properties, or in case the worker leaves without committing to the obligation. That is the first part. And that part is not openly sold in the market. It is sold together with the visa process by the Takamul and Musanid process. So I would say that as of today, the share of aggregators is 0, but with our partnership, it will basically we are going to enable the entire issuance process. The second element is relative to health. Health, you're talking about around 4 million of helpers that are currently in Saudi Arabia, and only a small portion of them is insured. Okay, so as of today, it is a small market. If you look at it in perspective, it might become something tangible.
And on this 800,000 that you just mentioned, those are under what the sector actually? I mean, those are general workers, or like in the construction, or again, those are domestic helpers?
Domestic.
Domestic helper.
Domestic helpers. Again.
Thank you.
Okay. So
Yes,
those in addition to the 4 million, right?
They are part of the 4 million.
Part of the 4 million. Thank you. Okay.
Thank you, Hussein. Thank you. Next one. I
Okay,
think we have a
so
couple
I
of
think
questions.
yeah, so there's a question: do you expect to onboard Al Raji as well into the new engagement model on the leasing side?
Thank you very much. Very, very good question. Anything that can align with our strategy, align as well with maximizing the interest of our shareholders and investors, definitely we will work on it. Next one.
Okay. I mean, so there's a question from Lina. She would like to understand the economies of motor insurance policy pricing increments. Since there's pressure on margins in insurance players in 1Q and 2Q, how long will the market keep on adjusting these new pricing schemes?
Thank you. We go just a little bit before the pandemic, and we will see the frequency of the price going up and down based on many factors. The price, when there is a pressure on the competition there, it doesn't mean it will remain always low. It as after the merge and everything, that insurance company, they are sensitive as well for different factors for changing their price engine. A price going up and down, but again based on many factors. And what we see now is the last year and the beginning of this year is going lower than in the low side, that we are expecting that it will go again up as a circle of the price in the last 6 and 7 years in the Saudi market.
All right. So I think obviously it's the top of the hour. Are you willing to take a few more questions? Can we complete the written ones, or maybe 2, 3 more? How do you?
I think we can
us
take one more or two, and then we can, anything that we are open, as you know, for anyone need to have, we are participating in many, welcoming any answering that coming from anyone in the future. But we can take one or two now. Thank you.
Okay, so we'll take 2 questions. So can you update us on the onboarding of Abdul Latif Jamil onto the updated Treza platform as one? And what is the current enforcement rate in motor?
Thank you, Nicola.
Yes, the onboarding is progressing as we were declaring also in the previous discussion. We are already operating with the new policies. We are currently onboarding for renewals. I cannot guide you exactly on the timing, but it will be a short-term completion. It is progressing as planned. In terms of enforcement, as I was saying, our estimate is that still between 25 and 30% of the car park is not insured in Saudi. And that comes, few of them are cyclical, no? Because of the renewal cycle being not yearly. There are people that renew and then spill over and renew after a few months. So they are recognized as non-continuous business.
Thank you. I would love to take the last one, if you allow me, because a very good question. And as I call it, as the black horse question. Can you clarify from Abdullah Al-Layyan, clarify what kind of services that will be offered under the financial services and how significant can be? Please, Nicola.
So financial services is a substantial market. It is segmented. We did identify a few areas that are more adjacent to our insurance proposition, and we started from there. It's not something that we're just exploring. So a few years ago, already in 2023, we launched in partnership with a few of the industry players a premium financing model, kind of a support for buyers, and that has been delivering in a very positive manner. We are going to extend our presence in distribution in partnership with the same banks and non-banking financial institutions to whom we are already cooperating on the insurance side. That will open opportunities in financing, leasing, personal financing, business financing, all areas where there is a strong demand currently in Saudi, and that demand is expected to reinforce double, triple over the next 4 or 5 years.
Thank you very much, Nicola. Zahid, to close, please. Thank you.
Yeah, I think we've gone through the 2 questions that Moyer did kindly extend the session to. For any further questions, obviously, you can please feel free to drop us an email at investors@rasan.co, and we very quickly come back to you with the answer or offer up a call and obviously take it through that channel.
All right, many thanks, Rasan management, for the call and patiently answering a lot of questions. And I think as Zahir mentioned, there are some unanswered questions, but you can email those across to the Rasan team, and I'm sure that they would get back to you. Thanks a lot, management, and thanks a lot
Thank you,
all the
everyone.
participants.
Thank you.
Thank
Thank
you.
you.
Thank you,
Everyone.
Bye-bye.
Thank you.
Bye-bye.
Recording stopped.